Hello, traders. Good morning, good afternoon, good evening. Uh, I hope you're all doing good in trading and improving day by day. And today we are going to cover a very important topic, which is the most essential for everybody to understand. Without this, you cannot do trading. Okay, so the topic which we are going to cover today is how to put stop loss. Friends, there are a lot of uh, doubts in the minds of people that whether to put stop loss or whether not to put stop loss. But a lot of studies have been made that not keeping stop loss, your PNL is much better. A lot of things are there, but psychologically stop loss actually helps. If you have a stop loss in place, you're always rest assured that in any case of unforeseen uncertainty, when you're not able to do something, sometimes systems hang, sometimes trading terminals hangs, those kind of situations, stop losses will always help you from taking the big losses. There are many times when I'm trading, many times stop losses are there, but still I'm in a major move, I'm not able to exit because the terminal is hang. And sometimes terminals don't log in also, there's so much of pressure, and the technology can always deceive you. So it's always better to have your stop losses in place and place it aptly so that you get the maximum benefit. It should not be the case that when I get into this topic in detail, I'll explain you that. So before we start this topic, let's have a look at our disclaimer. Everybody has to do their own research, take their own trades, and do their own paper trading before taking any decisions. You're responsible for your money, so always be cautious and do not listen to any advice without proper logical understanding of the advice given. Okay, so before we get started, just have a look at this picture. This is a rally race picture, and this you can correlate with the price and the stop losses. So usually these are all retail stop losses, and this is the price which is coming. Now, where will you stand and watch this race? Do you want to go and join this party and stand this close so that you get hit? Or do you want to place yourself in such a way that you can enjoy the race as well as you can be safe? So, if you understand this logic, it's very easy for you to apply apply this logic on the trading when you're doing. So, and this is what you need to understand. This is the mindset of retailers. If you're watching a level, my friend, you are not the only one who is watching that level and putting a stop loss. The entire world is watching the same level, and they're also putting the stop loss at the same level. And the person who is driving the price is also looking at the same level and is driving it so that they can get benefited from this maximum. So there is no place like where you cannot put a stop loss. It is like that. They're going to watch where is the maximum quantity and move the price towards that side. So it is a very important topic. So let's get to understand this further in detail, and let me show you what kind of stop losses are there, which we can, I'm going to take you through types of stop losses which you can use: swing low, swing high, 2x of ATR, fixed point technique, higher time frame candle stop loss, and trailing stop losses. So to understand all this, let's get to the charts. So this is a bank nifty chart. Okay, so I have placed the ATR here, and this is a 3-minute chart, and this is the first candle of 13th December, which is a 3 minutes candle. Okay, so here if somebody is taking a position, like you have seen the market has gapped up, and you have seen the first candle and the breakout of the first candle, you enter and you want to place your stop loss. Now the question is, where are you going to place your stop loss? A lot of people place the stop loss here, like below the first candle. That is also a good point if the day is trending like this. Else, a lot of people identify the previous day close below the previous day's close is also a good point, because whenever the price crosses the previous day close, there is something major which will happen. So this is a critical level. So you have to understand before placing the stop loss that where am I going to place it? Is it going to be very common thing here, or is it going to be the below previous close? That's how you have to identify. And if you are using an ATR, see the ATR for this is about 33, you can see. So multiply this ATR into 2. So that means 2x of this. So that will be the stop loss. That is 66 points stop loss is what you have to keep, so that your stop loss is safe. It's not hit by the price moving up and down. Price will not move up in single direction. There are some exceptional days like this, but usually they take a retracement and then go up. So the retracement days, let's have a look at those days. Let's understand it better. See, these kind of days, prices always go up, go down, go up, like this. They will not fall in the straight line. So if somebody has kept a stop loss on this, the stop loss is hit here if he has not smartly moved it up. See, why you are coming into the market, you are trying to make money. If you are placing your stop loss here and not doing anything and expecting the market to do you a favor by not touching your stop loss, it is wrong. It will not do like that. You have to be quick enough. See, you have placed your stop loss here first, and you have to be quick enough. The next swing low happened, then you trail your stop loss here. The next big candle happened, you trail your stop loss here. This next swing low, you trail your stop loss here. Next big candle, you trail your stop loss here. Above 20, then you place your stop loss below 20 minutes. Here you will get out. This whole move you will capture. So this is how you have to trade. You can't be sitting at placing one stop loss, the entire day goes, you see MTM going positive, then it goes to negative, and end of the day you will lose the money and get out. So this is not the way you should trade. So let's understand. If now I have explained you three types of stop losses, which is swing lows. Like you have to identify, if you are taking an entry here, there is a swing low here. So this is a swing low technique, which is the previous swing low. You have to see and place a stop loss here, right? That is a decent swing low for us. Or you go to a different time frame and see what is the swing low for that day. So this was the swing low. If you are using it entering the trade on this day, this is a short trade here. So both the swing lows are coinciding. So this is a good level for you to have a stop loss, like 2 or 3 points away. Right, so that's how you place the swing low. And there is one more technique, like if you're trading in, say, for 3 minutes, let's go to a different day. This is 11th December. Okay, let's see a short. This is the 10th December. If you're trading in a 3-minute time frame and you have identified the trend is going down and you want to short this, you can always go to a higher time frame. Higher time frame, and you can use any of the indicators like super trend or PSAR, and put them as your stop loss on the higher time frame, so that you are safe, that the small movements will not hit it. If you are trading in 3 minutes and if you see the move is happening according to your direction, then quickly you can actually trail your stop loss as per the candles, 3 minutes candles, and get the gain out of it. See, if you have placed your stop loss here, this has come very close to it and then gave the drop. Maximum profit was only here if you are able to time it properly, if you are in front of the system. Else your stop loss was taken out here on the same day. It has taken out your stop loss. So you have to be quick to trail your stop loss and make money and get out of the market. Don't be there in the market for the whole day. Here you got an opportunity again. Like this is a new wick which has formed. You could have placed a stop loss above this, and then could have seen the rally. Could have trailed your stop loss and get the maximum rally out of this. And which is the one which here fixed point techniques mostly people use. Like in options, people use 30-point stop loss as a fixed point because they don't look at the charts there. So they have a point that I don't look at the chart, but I will place a stop loss which is a fixed point. So in that situation, you always have to be careful with the quantity you are trading. Here, your quantity can vary according to your stop loss. If your stop loss is too wide, you will reduce your quantity. So let's understand how do we trade this on an options chart. So let's take this day. Okay, here for example, if we have say we have shorted a 31,800 put, put. Okay, so this was the day. So if you have shorted the 31,800 put, you can always keep the stop loss above the previous close, which is 308. 310 would have been your good stop loss for this day to start off with, or you could have taken this as well. But mostly in options, super trend also works well, and if you are watching the levels, then it works very well for you. But without watching the levels, if you have fixed stop losses, there is always a possibility that prices can shoot up, hit your stop losses and come back in options. That happens frequently. So like this, if you want to go and see the call, like say 31,900 call, this is a call example. Same thing, this was the previous close. Below the previous close, you can have your stop loss here at 131. If you have taken an entry here with the super trend, you see super trend was also not touched, only it touched here. If you have trailed your stop loss with the super trend, you could have been out here. Or else you could have catch. Let's look at a higher time frame. Let's look at a 10-minute. 10-minute super trend. See this. You have taken a 10-minute super trend, trailed your stop loss as per the 10-minute super trend. The stop loss was not hit till the day end. Okay, that's how super trend works very well. You can use it as a stop loss. You can also use PSAR as a stop loss. I will show you PSAR also. PSAR also works really well as a stop loss. You can keep trailing, and the moment you hit, you can get out of the position. Whenever there is a sideways, PSAR will be like this, close to, it keeps changing the direction, so you have to avoid that. Okay, so I think I have covered all the points. Trailing stop loss, you can, as I mentioned, you have to keep shifting your stop losses to the new swing lows so that they don't get hit quickly, and only they get hit if there is a change in the direction. Like in this scenario, this entire period, where is my tool? Okay, here you can see in this kind of a market stop losses are hit often, so always have out of the range stop losses below this. And there's one more interesting thing you can do. If you are trading a range, you can actually stay away from the market and have the stop loss orders, like stop loss buying above this, stop loss selling above this, and whenever one triggers you go in that direction and enjoy the profit. That is the best way to actually trade any kind of events also. Usually I do that. If there is any announcement coming in, I usually find options and have the high and low mark, and then I keep the stop loss buying and stop loss selling below those, so that whatever gets triggered we go in that direction and the movement will be very fast to capture. So that's it guys, that's it for today. And I think I've covered all the topics which I have mentioned. And have a good trading week. Next week is going to be a little tricky, so be careful when you're trading. And every day you need to make money, so be consistent. Don't trade too much. Have a consistent mind that this is the time I'm going to enter the market and this is what I'm expecting. If my target is achieved, I'm not going to trade and get out of the market. If my day loss is hit, then you're not going to trade. So have a plan like that and trade, and that will keep you long in the market. And this is how you have to grow as a trader. Thank you so much for watching.